Investing versus investing in your business. So today we're going to be talking about the difference and the opportunity cost of investing in stocks or equities or in your brokerage account essentially versus investing into your business in whether it's ads, supplies, employees, whatever it is. But we're going to be kind of looking at the difference between these two things and what's more beneficial to you depending on what stage you're at, depending on what you're doing, depending on where it's being allocated, etc. So that's basically the gist of this video. Go ahead and smash the like button if you do enjoy. And this is Kev's Mindset. Let's get straight into it. So first off, we have a lot of things to cover. When you're looking at equities, it depends on, okay, what are you investing in the first place? Let's say you're investing in an index fund. You can assume a 7 to 8% return annually, compounded over a long time. It's a lot more money, right? That's kind of the gist of the market that we tend to look at. Now, let's assume that you're investing in individual stocks, and let's assume that maybe you're pretty good at it. Maybe you concentrate your portfolio into certain stocks, you buy and sell at decent timing, you kind of do well for yourself in the market. Let's assume a 20% year over year growth rate. So, okay, at that point, you're doing 20% year over year. In 10 years, that's a 200% increase. So, you're doing pretty well for yourself. That's pretty much a triple. So, how do you kind of gauge where you should set your money? Should you just do it evenly? Should you, let's say you make $2,000 a month, should you put $1,000 towards stocks and $1,000 towards your business, or whatever it is? Let's kind of like break this down. So, and I'm saying $2,000 openly because I know that not all of you are teenagers. A lot of you have, maybe some of you have expenses and whatnot. But let's say you have $2,000 that you're able to allocate. We'll kind of rephrase it like that. So are you going to put $1,000 towards stocks and $1,000 toward your business, or what's the plan here? Now, when you're first setting up we're assuming that you're kind of past the initial cost of setting up your business. You're past all the legal fees, you're past all the kind of licenses and the fee, like all the stuff that you have to do in order to actually set up your S Corp, LLC, whatever it is, and those like kind of initial filings. We're past all that at this point. Now we're looking at, okay, are you going to pour money into advertising, pour money into branding, pour money into sponsorships, and all these different things that will build brand awareness, maybe generate some sales and generate kind of this bigger image for your brand? Are you going to push that more, or are you going to push just investing over and over again and assuming that you're going to get some sort of return over a long span of time? Now, the way that we look at this is, okay, in the stock market, you can assume some sort of return. Let's say you're doing it standardly and you're just buying kind of, let's say QQQ or the SPY or NASDAQ or whatever it is, some sort of index, and you're continuing to average into this index. You can assume a certain return. Now, when it comes to your personal business, it's a whole different ballgame, because let's say you can put $1,000 into ads, and then from that you generate, I don't know, $2,000, $3,000 worth of sales. Now that's a way better return. But then from there, you have to cut margin and see what's going on and see how much you're really taking on from that actual expense of advertising. So I think it's really important to just kind of gauge where you are in your business and gauge, okay, how important is it for me to do this versus this? Now, if you continue to build out your brand, let's say you do this for a year, let's say it's $1,000, right, each month. So you put $12,000 into your business and advertising over the year. Let's say you got better and better. Now you're pouring more money into it because you got better and money's coming in through the business. Now you can continue to reinvest that. But I think it's really important for you to kind of gauge, where can you make the most money? Let's say you have a high margin product that you're selling in your business. If you sell one of those products, then you're making a lot more on those advertising dollars. So customer acquisition goes way down, and because you have like a decent customer base, brand starts to build up. You get more acceleration, more speed, more sales, more volume. So I think it's really important for you to tell, okay, is this a business that you're in for the long run? If it is, then yeah, I mean, advertising for your business can make a lot more sense than seeking some traditional return in the markets, especially if you don't have a huge sum of capital. I think the markets can definitely be a way to preserve capital and definitely grow it over time, especially if you're going a safer route, or if you're going for like maybe picking stocks or even options or whatever it is. You can grow your money a lot faster, but you also take on a lot bigger of a risk. Let's say you lose all your money. Yeah, you get up to $3,000 back in losses, and then the rest you can count against your kind of income or count against any other taxes that you may have to pay. And that's great and all, but it's not the same thing as when you have a business. Let's say you spend $1,000 on advertising, you generated sales. That $1,000, even though you generated sales, is still deductible because you have an expense. It's a business expense, and you put that in as a deductible. And then you continue to grow your capital, grow your brand, and do all these things. There's a lot more tax benefits when it comes to playing as a business. When it comes to playing as just an investor, you can do certain things, and there's definitely the bigger you get, the more you can do. But as a general investor, and just like a general rule of thumb, there's a lot more that you can do with your business than you can do as a traditional investor. So for me personally, I think it makes a lot more sense to continue to invest, continue to build your portfolio out, especially so that if anything goes wrong, you have some cash to support you on the sidelines. But it's also really, really important for you to have cash on the side, like cash being deployed somewhere. And I think it's really useful for you to deploy it towards your business, especially if you have especially if there's like timing that needs to be met, or if you have a really great business model or whatever it is. But if you feel confident in the business and you think that it's a genuine brand that you want to build, then of course, go ahead, build out that brand, invest the money into the business. In the long term, it'll probably pay out if you do well and continue to reinvest into your business and continue building out your brand. With stocks, it definitely will pay out in the long term, but you have to take notice that, okay, if you're making, let's say, $50,000 a year right now, and you're able to invest $2,000 or $1,000 into stocks and $1,000 into your business, okay, is that really worth it? Because if let's say you were putting those $2,000 towards your business, or let's say $1,800 towards your business, $200 towards stocks, and you were able to build up that business substantially, then over time, if you increase your income and you can eventually put maybe $5,000 a month into your stocks, $10,000, $20,000, $30,000, whatever it is, if you can funnel that money that's actually continuing and you have a successful and cash flowing business on the sideline that can now allow you to replace your job or whatever it is and funnel cash from there into your brokerage, that can be a lot more beneficial in the long term, because the bigger the shovel, the more it'll accumulate. If your shovel is 100 grand versus 20 grand, you can accumulate capital a lot faster, and then you could build that capital a lot faster. So I think it depends on every person, but it also makes sense for you to really look at the differences. If you're not putting a lot of money into your stocks and you don't think it's going to make a huge difference over time, and you have a really great business on the side that you're not able to allocate enough capital to because you feel kind of obligated to invest in stocks, I would say weigh your options and definitely look at the business, see if there's higher margins available, if there's higher growth for your cash in your business. Then you could build some brand equity, and maybe even you could have some sort of exit. So those are my 2 cents on kind of business versus stocks. Let me know what you think about it in the comment section down below. I'd love to hear your thoughts. Go ahead and smash the like button if you did enjoy, and I'll see you in the next one. This was Kev's Mindset.